It's really important to realize the winds are shifting. The 19th century is commonly recognized as the age of Britain. At its peak, the UK ruled over 20% of the world's population. The 20th century was dominated by the US, and that's why we have frameworks such as SWIFT, the IMF, the G7, and the dollar system. All of these are US centric architecture the world uses today. But the 21st century is going to be Chinese. And within the G7 itself, we are seeing the Western order break apart. Just last week, Canada ran to China, and now Italy is doing the exact same thing. Meloni is in Beijing and she wants to reset economic ties with the Chinese. It's interesting to note that she's probably the only G7 leader still popular with her voters. Obviously, she knows the winds are shifting. No matter who gets into the White House in November, in 2025, the EU economies are on the brink of disaster. If Trump wins, his global trade war will begin. And if Harris wins, the Ukraine conflict will never end. And that means more inflation and more economic pain. Italy has a big spending crisis. Their budget deficit was 7.2% last year and almost double digits a few years back. Meloni has to bring it down to 3% or face potential sanctions from the EU itself. So there's a big desperation to expand trade and drive exports up. And the only market big enough to move the needle is China. Half a year back, Italy pulled out of China's Belt and Road Plan. Most likely, Meloni was pressured by the US to snub the Chinese. Of course, China wasn't too happy about this. Meloni heading to Beijing for a 5-day visit is basically one big apology tour. She's doing a big 180. She's bringing up Marco Polo and making a big reverse on a previous decoupling with China. To that effect, Meloni signed a 3-year action plan with China. And here's the interesting part. This plan aims to implement the past agreements, which basically brings Italy back to the BRI just without the official title. And I guess all roads really do lead back to Beijing. Italy, like the rest of Europe, they have a big fear. If Trump gets back in, he's going to move jobs back to the US. He will unleash a boatload of tariffs and incentives to get companies from the EU to relocate to America. And if that happens, Italy's manufacturing, which is around 16% of their economy, will be screwed. More manufacturing jobs could leave for American shores. Italy needs trade to increase with China. She wants investments to also flow into Rome, not just the global south. Chinese investment in Italy is about a third of the level of Italian investments in China. Meloni wants to narrow that gap, but there's a fundamental problem she needs to address with Brussels, which are the EV tariffs. China doesn't need to invest in Europe to manufacture or build stuff. They are the manufacturing base of the world. Their technologies, in many ways, are actually superior to the EU. The only reason why China invests into countries today, especially in the West, is to gain market access. Since 2016, Chinese money into the Eurozone has collapsed from nearly a peak of 50 billion euros to less than 8 billion today. The level of Chinese acquisitions or M&A in blue is becoming non-existent thanks to all the scrutiny of China investments. The only investments coming in are for EV greenfield projects, and that's basically building EV manufacturing plants from the ground up. And that is what Italy is after. But if Europe still blatantly sides with the US, China simply won't invest in the EU countries. They will just pivot to other markets. There's a big geopolitical risk as well, especially when NATO threatened the seizure of Chinese assets in the worst case scenario. Just listen to Anthony Blinken. He gave another George Bush variation of "you are either with us or you're against us."
If you're not at the table in the international system, you're going to be on the menu. So it was very important for us to re-engage multilaterally, and we've done that. When it comes to strategic competition, and there's no doubt that we have one with China, there are a few things to be said. First, we have an obligation to manage that relationship responsibly, and I think that's something that we hear from countries around the world, and it's clearly in our interest to do so, and that's exactly what President Biden is doing. And when it comes to other countries, the point is not to say to country X, Y, or Z, you have to choose. The point is to offer a good choice.
So whether Italy gets their investments or not really depends on how they can pivot away from the US. to assure Beijing that yes, we can protect your factories, your plants in Italy are safe from US sanctions. When it comes to trade, Europe also has to pivot fast. Even before the EV tariffs, China is decoupling from EU products. Exports from Germany, for example, into China have fallen by 14% in May. And this shouldn't come as a surprise. Beijing is the world's low cost producer and they are moving up the value chain fast. Chinese companies can supply the domestic market with affordable goods at the same or even better quality. They don't need Western imports to survive. The EV situation is the perfect example. Chinese EV brands have grabbed a record 11% market share in Europe. Despite the tariffs coming in July, car imports from China are flying to the moon. There's still an enormous appetite for Chinese products in the EU. There's really no stopping Chinese goods from entering Europe. Whether it's from imports or products made in an EU factory, consumers will still be buying Chinese. So Italy needs to decide whether they want to work closer with China and profit, make it easier to do business in Italy and attract all the Chinese investors in, or if they want to keep playing geopolitics and end up like Germany. Speaking of the Western order breaking, we have another big update to share. BRICS is about to expand with a major Asian country about to join. For over a month, we've heard Malaysia expressing interest to join the bloc, and now we have the Russian Foreign Minister Lavrov in the country to affirm the bid. We have to take this seriously. Russia is far from being isolated in the world, and they are actively helping to reshape the world order, and this time by helping a Southeast Asian country to join BRICS, the China-led economic bloc. Russia is the chair of BRICS this year, and Lavrov has given the Prime Minister Anwar assurances and it's just a matter of time before it becomes official. It could be as fast as October when the bloc expands with Malaysia in it. Obviously, this is a nightmare for the West. The US has an entire Indo Pacific strategy, and it all has to do with containing China. In Western surveys like the Pew Research Center, we see the same old story that the world has a better view of Washington. From 2017 all the way to 2024, the US scores higher ratings in public opinion versus China. Is this really reality or just confirmation bias? Because when we narrow it down to Southeast Asia, the ratings completely change. According to the Yusof Ishak Institute, countries were surveyed on their preferred alignment choice. Do they prefer China or the US? Southeast Asia as a whole favored China more. And a big shout out to our sponsor today, Indigo Precious Metals. When it comes to buying gold and silver, I trust Indigo Precious Metals in Singapore. They have made investing in precious metals safe, fast, easy, and simple for both small and large scale buying. I've been stacking gold for over a decade now, and I've learned two things when buying. You want to buy authentic gold bullion, and you want to buy it at the lowest premium possible to stretch your dollars even further. And I'm glad to say I found both of this at Indigo Precious Metals. There's a lot of uncertainty in the world today. We have geopolitical chaos and the values of fiat currencies getting debased. Inflation is not gonna end, and that's why I consistently buy gold to preserve my wealth. Indigo Precious Metals is a leading retailer in Singapore. They specialize in physical gold, silver, and platinum. They are my one-stop shop when it comes to buying bullion. Their prices are sharp, and they have the best brands on sale, and I can test the gold on the spot. So if you're looking to make your first gold purchase, Indigo Precious Metals is the best place to start. Whether it's 1 ounce or 1 kilo, this is the reputable dealer you are looking for. So take action today. Click on the link below and enjoy a discount on your first purchase with the code SeanFu. Start your gold stacking journey today. In just 1 year, China has edged out the US with a 50.5% of the vote. Countries like Thailand and Malaysia saw their ratings for China jump by 10 or even 20%. And this is a clear indication that the region is shifting closer and closer towards BRICS. There's potential for another country to join down the road. Indonesia is a big one, a good candidate, and that really won't be surprising. Many nations they are tired of US foreign policy and they see China as the power that can help their economies grow. A big reason why Malaysia wants to join is to decouple from the US dollar, at least use less of it in their bilateral trade. And that's exactly what's going to happen, especially after joining BRICS. This is horrible for the US because the fewer countries trade in the USD, the harder it is to keep borrowing money from the world. If Malaysia starts trading with the BRICS in local currencies, this will be another straw on the camel's back. The majority of China's trade has been settled in the RMB, 53% versus 43% in US dollars. Countries aligned closer with China have no problem ditching the USD to buy and sell stuff with Beijing using the RMB. Not good for the US and their fiscal situation. The national debt has crossed $35 billion today. Interest payments annually are $1 trillion a year. Countries ditching the dollar is going to bring forward the inevitable, a national debt default. Malaysia joining the BRICS also goes beyond ditching the dollar. It's about having closer relations with China to boost their economy, especially when it comes to semiconductors. Malaysia has a plan to double their exports of chips to over $250 billion by 2030, and that's only 5 or 6 years away. To accomplish this, Malaysia needs a ton of money. Penang is Malaysia's semiconductor hub. In 2023, they brought in over $13 billion of investment into the state. Companies like Intel and Infineon produce their chips there. Malaysia is a big winner in the US-China chip war, but they need more talent and they need more money. American funding is good, but Chinese money is even better. Malaysia wants to be a gateway for China to export to the world. Consider how expensive it is to develop a semiconductor economy. Anwar wants a future centered around AI, but the cost will be enormous. It's something that Malaysia simply can't afford on their own. To make advanced chips, you need lithography machines, and there's only one company that makes them. Each of ASML's machines costs nearly $400 million. That's a lot of money, and why there are so few chip makers in the world? Very few companies can really afford them. So Malaysia's only chance, only shot at becoming a semiconductor hub is to attract external investment in. Anwar also wants to build up legacy chip production as well, and this is where China plays a very big role. Despite the US sanctions, China's chip capacity is still increasing. Companies are going to open 26 new factories producing chips for everything: mobile phones, refrigerators, and EVs. So if Malaysia wants a slice of the pie, they need to convince China. Beijing needs to know that investing in Malaysia is safe and that their assets, their factories, their plants aren't subjected to US sanctions. And the best way to do that is to simply join BRICS. That way, Chinese firms can build affordable chips in the country for global export without any worries. With Chinese investment in the country, Malaysia can tap into new markets, including Brazil, Russia, and of course the UAE. They are all part of the BRICS bloc now. The global chip war is going to reshuffle supply chains. There will be winners and there will be losers. Of all the countries in the world, China has the biggest pocketbook. They have allocated $142 billion in funding to grow their semiconductor industry. The US only has $72 billion and the EU less than $50 billion. Even if you add Taiwan into the mix, their funding is still lower than Beijing. So Malaysia's bid to join BRICS is a strategic one. Yes, it is to de-dollarize, sure, it's also to increase trade with Russia. But I wager the main agenda is to get Chinese chip companies to invest in Penang. The Western order as we know it is in crisis. Within the G7 itself, three members are tilting away from the US towards China. Canada made a surprise visit to Beijing. The UK refuses to punish Chinese EVs. And now Meloni is talking about Marco Polo in China. In just 2 years, the Biden White House has really torpedoed America's standing globally. And that's what happens when you impose endless economic sanctions on the world. You have countries like Malaysia looking to diversify their economy, and the only logical place left to go is to China. We can really expect BRICS and the Global South to expand further and further. But as always, let me know your thoughts. Which country will run to China next? Will it be France? Will it be even the UK? And will Malaysia enter BRICS in 2024? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.